Hi guys, it's Jonathan Lowe here. Today we're going to be talking about everything to do with credit scores as well as how to boost your credit score. Let's get started. Building a good credit history here in Canada is very important for your financial health. Your credit score can mean the difference between getting a loan approved or declined. Here in Canada, the credit scores ranges from 300 to 900 points. As you can see on the chart below, 800 to 900, congratulations, you have an excellent credit score. 720 to 799, you have a very good credit score. 650 to 719, this is considered good to lenders. You may not qualify for the best interest rates, but you're in the right direction and you should keep on going. Now 650 and below, this means that your credit score needs some work, but don't worry because this video is all about teaching you how to boost your credit score. So you must be wondering, well, how is your credit score calculated? There's actually many factors involved in how they calculate your credit score. The most popular one being from FICO. And here's the chart below where you'll see how it's broken down. Approximately 35% of your credit score will depend on your payment history. 30% of it will depend on the amount owed. 15% will depend on the length of credit history. 10% will depend on the new credit history. And finally, 10% will depend on the type of credit. So now that you understand the actual breakdown of how they calculate your credit score, the next step is probably like, where do you get your credit score from? Well, here in Canada, there's two agencies that actually give you the credit score. It costs about $20. The first one is Equifax, the second one is TransUnion. Now, if you want to get a free credit score and report, that is, you can also go to a place called Borrowell, which they draw their information from Equifax. The second one is Credit Karma, which they draw their credit score information from TransUnion. So now that you have your credit score, your next question is, how do you boost your credit score? Starting off with paying your bills on time. I know it sounds simple, but trust me, a lot of people miss it. What you have to make sure is that if you can't pay the full amount, at least pay the minimum payment. The next one is check your credit history report at least once a year to make sure that there's no errors on there. If there happens to be, please contact the credit bureau immediately to get that fixed. The next one, pay off your old debts. Now, it doesn't hurt to ask your creditor, for example, accumulation over time, it's going to cost more and more money for that debt. So you can call in and ask, okay, maybe if we can work something out where I can pay it off now, maybe we can get a little bit of a discount on that. That might work for you. The next one is be aware of retail credit cards. What happens is sometimes when you're going to Canadian Tire, Hudson Bay, Walmart, whatever it may be, they may give you an incentive to sign up to the credit card today so you get a discount. Well, when they actually do that and you sign up, they're going to do something called a hard credit check. And that's something that actually hurts your credit score. So for example, if you're hovering around the 650 range for the credit score, you're just about to apply for a mortgage, well, that credit card that you signed up for previous days can actually be the determining factor of whether you're going to get that loan or not. It might drop you from like 650 to 640, and then you're not going to be able to get it. The next one is keeping your old credit alive. What does that really mean? For example, if you signed up for a credit card 10 years ago and you barely even use it, just keep it. Just use it once in a while, and that actually helps out with your credit history because you had it for 10 years as they see on paper and that you've been paying your bills off on time. So using it on occasion, better than actually just canceling it and then trying to open up a new credit card later and then starting everything all over again. The next one is having different types of credit. What does this mean? For example, having a credit card, a line of credit from your bank, mortgage, whatever it may be. If you have a different types of credit, the credit bureau will look at this in a positive light because they'll see that you can pay off different types of loans at a good time. The next step is being efficient with your credit shopping. For example, when you're going to go out and get a mortgage or a loan for a car, you're going to go to different lenders. You're going to be shopping around, and every time you go to one and process your information, it's going to be considered a hard inquiry. So to actually make this a single hit, according to the credit bureau, do it within 2 weeks or less. That way, you're not going to get hit multiple times with hard inquiries. The next one is credit card limits. Let's just say that you have a credit limit of $10,000. That does not mean that you should max out your credit card. Credit agencies do not like to see high balances. There's a popular ratio that determines how you use your credit. It's called the credit utilization ratio. General consensus is 30% or less. The lower, the better. So in our example, we use $10,000 as the credit limit. So 30% of that would be $3,000. So use $3,000 or less on your credit card, and that would be ideal. Next is increasing your credit limit. A lot of people think that if you increase your credit limit, you'll just be spending beyond your means. Now that's not necessarily true. If you increase your credit limit, your utilization ratio will actually lower and your credit score will increase. The final one is setting up automatic payments. You can set up automatic payments for your mortgage, your student loan, your credit card. If you set it up, you'll never be late for your payments. Alright guys, so let's wrap up our video. If you liked our video, please subscribe or hit the thumbs up button. I really hope that we were helpful, and please tune in for the next video coming up next week.